All right, guys, we got week 9 in the books. We are done with it. I've got a lot to go over, and I want to cover it as fast as I can. So let's get right into it. All right, let's see how we did for week 9. Net liquidation was $18,165. Total premium collected was $393. My percent return was 3.86%. Still in the green for the week. That's great to see. Year to date, net liquidation, I have a gain on the year of $2,141. Total premium collected on the year is $2,513. And my return year to date is 13.36%. And again, I'm looking to turn that into a 50% return by the end of the year. And you can see we are just starting a new month and I'm already at 13.36%. I think we're only looking up from here, and who knows, maybe I'll see more than 50%. Time will tell. You can subscribe to find out more, see if I actually hit my goal or not. So as you guys know, I'm moving my money from my cash account into my margin account, and I've finally been able to make the final transfer and got all my accounts closed in the cash account, and now it's all moving into my margin account. So I'll be fully funded in that, and I've been continuing to do put spreads. I'm making good money on that. I've also tried a couple new things that I'll share with you. The first thing I want to share with you is an update from my options on futures strategy, which is just like my put spread strategy. I'm just using that E-mini futures contract on options to leverage my small account, reduce my buying power, and still get a decent return. I want to share with you, though, some things that I learned. There are some nuances with this E-mini S&P 500 contract. It's called /ES, and the last two digits have the specific expiration on the contract. So it might be like an H4, and that stands for like March 2024. You can see that stuff online, and you'll see the codes that it uses. It's really weird, but once you see it, you'll understand. The other thing that's really nice about the E-mini S&P 500, its futures and using options there, is that you don't have a pattern day trading rule. So if you're doing a 0 days to expiration and you have less than $25,000 in your account, you can do that as much as you want, and you're not going to be limited to the pattern day trader rule. The pattern day trader rule limits you to three day trades in a 5-day rolling period. This extremely limits your ability to be able to seize opportunities. Futures contracts are regulated by another governing body other than the SEC, and the PDT rule only applies and is governed by the SEC. So it has its pros and cons, but for me, pros outweigh the cons. I'm going to be trading more on that until I get past the PDT rule. And hey, I still do the SPX whenever I have the cash to do it. But what really caught me off guard with the futures contract and the options is that the end of the month options contract is not an American style options contract. It's a European style options contract. And what that means is that you can freely trade like normal. You're going to be trading this option contract like it's just a normal contract, like you're trading options with, Tesla, Palantir, stuff like that. But until the end, at the very end, so that it expires on a Thursday. And then when that expires and you're holding the position into the expiration, you're stuck. And the price continues to move and you have no way to get out. So this European style options contract, the way it works is that you trade like normal until the expiration. And the person that owns the contract, they can't execute that contract until after expiration. So if you're selling an option and you're into expiration, that person has the ability to cash in on that options contract and you can't get out of it. You can't make adjustments. The only thing you can do is wait for settlement sometime Friday morning. And again, that it only applies to the end of the month options expiration date on the E-minis S&P 500 contracts. So be mindful of that. Also, from what I understand, the S&P 500 SPX ticker symbol, the AM expiration is also a European style expiration. So you'll be stuck if you wait for it to expire. So be cautious on what you're trading. Every expiration date could be different depending on what you're trading. And I learned that the hard way. So I was doing a 0 days to expiration strategy, which is what I'm going to share with you here in just a minute. And I was trying to close the positions and it wouldn't let me. It was an iron condor and I tried to close the position and then it said that I didn't have a bid-ask spread in one of these contracts. So in my mind, I thought, well, it's cash settled, so I'll just wait for it to expire and then I'll just wait for settlement. No big deal. Well, it didn't settle until the next day. So the price started moving in the money in my position. And so I got kind of nervous that night. But whenever I woke up, the money was back into my account. But I had $1,000 on the line. And you can see I only have, $17,000 to play with here. Losing $1,000 would be a big hit to my performance. So thankfully, this time it worked in my favor. So just be mindful of that. Be careful whenever you're trading futures or anything like that, because they're all different. They all have their different rules and things like that. So the next thing I've been trying out is a 0 DTE strategy. And so it's basically I'm trading iron condors at the beginning of the day on the SPX or the E-mini. So what I'm doing is I'm doing a $20 out of the money iron condor. So I go $20 out of the money up, selling a call, and then $20 out of the money, selling a put, and then I have $20 wings. Basically, that's buying a call and buying a put on the ends. So it ends up looking like, if you look at the curve tab, it looks like a trapezoid. So as long as the price stays within the certain range, right, inside your call and your put that you sold, you're going to make money. So I just wait for a 25% return, and then it closes the position. If it doesn't, it goes against my position, then I have to ultimately make the decision to either make an adjustment or just take it at a loss. And so my problem is right now with this strategy, I've been doing it from Monday to today, and it's been about a week, and I'm down a couple $100. Now, thankfully, my account is still up. My strategy on 0 days to expiration has not been very good. And I want to share with you probably on a daily basis those updates. I want to be able to share with you those that strategy. It does happen very frequently, and I'm making a lot of trades, and it's very difficult to keep up with. But I think I can keep track of it if I update you on a daily basis. They won't be like very edited videos, but just a way that you can kind of just follow me along on what I've learned and how I'm doing in that realm. So the other thing about options on futures is that the commissions are a little bit higher. You're going to be spending about $2.50 per contract. So normally, in the SPX, for example, you'll be trading $1. So you're looking at an extra $1.50 per contract whenever you buy and sell options. Plus the commissions are a little bit more. You're going to be spending around, I believe it's like 78 cents in fees. So just something to keep in mind whenever you're trading the options on futures, that the commissions are going to be a little bit higher. Just something to consider. You can still make money. It's just something to be mindful of. So if this video was a help to you, please hit the like button. And hey, if you want to follow me on my journey to 50% return, and hey, maybe you can learn something, or maybe you're considering trading options or different things like that, different instruments, feel free to subscribe and follow me through my learnings. Some things you just learn the hard way. So we'll see you guys next week. I'll update you on how I did. And then also be looking for daily updates on my 0 days to expiration strategy. We'll see you next week.